Hello. Nice to see you guys again. It's 𝗟𝗂𝘀𝘁𝗊𝗋 here. I might be posting this on my 𝗏𝗏𝗏 channel, but last night I did a live stream following the Q3 2023 earnings for Tesla, and Elon Musk had some pretty dire statements on the market as a whole, and the fact that basically is like interest rates need to go down. This is especially going to hit the car markets, I think, first. But yeah, I want to just get into his statements and what that means, why he's saying these things, and what that means for the broader economy as a whole. First, here are some of Elon Musk's statements.
No, we're definitely making the factory in Mexico. We feel very good about that. We put a lot of effort into looking at different locations, and we feel very good about that location. And we are going to build a factory there, and it's going to be great. There's going to be a broken record on the interest front. It's just interest rates have to come down. If interest rates keep rising, you just fundamentally reduce affordability. It is just the same as increasing the price of the car. So I just don't have visibility into. If you can tell me what the interest rates are, I can tell you when. But I am still somewhat scarred by 2009, when General Motors and Chrysler went bankrupt. So, well, that's now 14 years ago. That is seared into my mind with a branding iron. Because Tesla was just hanging on by a thread during that entire time, and when we closed off a financing round in 2008 at 6 p.m. December 24th, Christmas Eve, and if we had not closed that financing round, we would have bounced payroll 2 days after Christmas. So we actually closed that round on the last hour of the last day that it was possible. Stressful, to say the least.
So yeah, there it is, guys. Interest rates must go down. Basically, because of inflation, the Fed has been raising interest rates to try and tackle rampant spending. And now that, of course, this is kind of inevitable. Car companies do really well when interest rates are low, and they do particularly badly when interest rates are going up. For understandable reasons, a lot of people buy cars based on the monthly payment, and so when interest rates go up, the monthly payment goes up. I think everyone that's ever taken a loan or has any knowledge of the economy understands this. I think a little bit my question to sort of maybe Tesla shareholders that thought that the trajectory of this stock was just constantly going to be going up. Like, what did you think was going to happen when interest rates went up to car companies? I mean, I'm a sucker because I'm currently holding Volkswagen shares, and they're definitely going to be affected by this as well, because I mean they don't have the attractivity, the consumer power that Tesla brand does. So yeah, this is definitely going to affect all shareholders of all car companies. And yeah, so basically the first thing that's going to happen for all car companies is the margins are going to drop. So if you're a shareholder, just be aware of the fact that you're going to be getting less margins. You might see higher revenues and lower earnings per share. This is because down the production line, the people that are borrowing money to produce steel and things necessary for the car and all the things that are supplying the components for the car, they're going to be becoming more expensive. That's going to make the capital expenditure of the car more. And yeah, and then the car companies, people selling cars, they have to deal with the fact that consumers are ruthless, and if they don't have the money for a car, they're not going to buy it. And so yeah, basically what we can see is you might see revenues going up as they lower car prices in order to attract more sales. And they are making just the materials are more expensive, and then they got the lower price. So just be looking out for earnings per share going forward, and that will really separate the wheat from the chaff in terms of which are the most excellent companies in the world right now. And so yeah, but basically Elon Musk is saying to kind of just generally to the world, interest rates must go down. However, really from a broad economic perspective, if you're Jerome Powell or you're sitting in the Fed, this is a marker that raising interest rates is doing exactly what they are meant to be doing, which is protecting consumers. So, I mean, essentially the prices are coming down because consumers have less purchasing power, but in another way, you look at it a different way, consumers are going to be getting themselves into less debt now because cars will be lower in price. I mean, it's still on consumers. Consumers might take terrible, terrible loans for cars, but realistically, a lot of people will just benefit from the fact that car companies are bringing prices down. This is exactly what the point of raising interest rates is, to lower inflation, and that is what this is doing. Another thing that is going to affect is, what's funny is you sort of think that we escape these sort of macroeconomic company events, but this is so similar to, I think it was like the 60s, 70s, 80s, 90s, maybe particularly the 90s. Shows like Seinfeld, they had seasons, they came out at particular times of the year, and that was because of car companies. They advertised during particular periods of the year, and a boom in the economic cycle happened at a particular time of the year, and that is when they released TV shows. It was all built around car company advertising. And so I'm wondering, Elon Musk is talking about the fact that he is going to be slowing down production on the Mexico site. And this is going to be happening across the entire economy because as consumers start spending less because they are borrowing less because borrowing is more expensive, companies that were developing things, developing factories that were going to be products that they were going to sell to consumers, they're not going to be able to afford to have as many people on site and for as many hours as they did before. And so production on massive construction is going to go down, and that's just going to have another negative effect. It's just, Ray Dalio calls it the change in world order. It happens on a typical cycle of around 7 years. It can be a few, like 2 to 5 years longer or shorter than that. But yeah, typically a market cycle happens every 7 years, and we're sort of 3 years in to the downward side of a market cycle. So you don't really know when you're going to come out of it, but essentially it will all be triggered when interest rates start to go down again. But we have no way of knowing when that is right now. We just have to keep watching the consumer price index announcements. That's our best indicator. But really, we just need to buy quality businesses and just stay the course and just hope that our businesses are resilient towards lowering revenues, lowering margins, and rising debt costs. If they are resilient to those things, they're going to do excellent as the market cycle recovers again. That's all I wanted to talk about. Hope you enjoyed this video. Leave a thumbs up and subscribe and hit the notification bell if you want to be notified when more videos get uploaded like this. That's my little Hayden bear in the background. Don't worry, he's very bullish on the stock market. So he's not a bad, I didn't post him there as a bad omen. That geezer, he loves stocks and shares and he's all good. All right. Yeah. Also, that's Teddy. Theodore just sniffling the bed. Bye.